Hello and welcome to FXcast. This is our FXcast market analysis for Thursday, June 16th, 2011. In each of our videos, we try to come up with high probability trading setups. We'll look at the gold chart. We'll try to come up with a low volatility watch list, an inside bar watch list, and we will look at the economic calendar to see what could affect our open and potential trades. As always, please send your questions to analysis@fxcast.com. With that, let's pull up the charts. We are starting off with gold as usual. We can see our beautiful uptrend, but our story remains the same for the past couple of weeks. We've been consolidating, and the 50 moving average is our line in the sand. We bounced here, and now we're potentially bouncing, but we're not necessarily making a new high either. So, what we have to watch is let's grab our trend line tool and draw it on over with our wicks here. So we've got the 50 moving average, we've got this downtrend working on, so the market's going to have to resolve itself one way or the other. On our market profile, you can see what a crazy day it was today, down and up. So we have a wide market profile. Point of control is up. We were down in the teens, but now we're up to 1524. That's good. RSI is heading down, so possibly this 20 moving average might hold up as resistance. We'll see. But in the end, we're waiting for a break out above our wicks here or below the 50 moving average. Now we can also see this consolidation. Wait, actually before I do that, almost forgot. When we look at this long term on gold, we can see that obviously tremendous up move. Haven't seen the 20 moving average in who knows how long. And our uptrend line, there's certainly room to come down. So there's room for a pullback, but we want the market to tell us which way it wants to go. Now when we switch over to the Aussie dollar, we can see a little free fall here. Point of control is above us, but as easy as we came down, we can go back up just as quick. We can see, though, really clearly on the Aussie dollar this consolidation range that we're in, below 1,720 or above 1.0433. So, we need to go ahead and there's no trend that we're trading. The market either is trending or consolidating. So right now we're consolidating, and usually consolidates 80% of the time. So we need this to go ahead and tell us what it wants to do. When we zoom out here on the monthly here, we can kind of see beautiful uptrend, and there's certainly room to pull back if that's what the market wants to do. Finally, not finally, we'll go over to the pound dollar right now, and we can see that on our hourly, it wants to move up. Why does it want to move up? Why is it oversold? Look at our range. It came right down to our uptrend line and bounced. So there is a trade there. If you trust your lines, you got to buy them, or you wait for the break. And so you can see the zone that we're in, where we're selling, where we're buying, where we're waiting for a break. So this one's also not trending, it's consolidating, but we had our buy here based upon our uptrend line. Finally, we have the euro dollar. Here, look at this free fall, and you can see that in our daily action. And what we also see is that we broke the 20 and the 50. Now if we go back, here's the Aussie dollar, still trying to hold on to the 50. Here's gold, put it back on a daily, trying to hold the 50. So my point is that the euro dollar is showing a little weakness, catching up to the weakness that we saw in the pound dollar. So what we have to do is kind of sit here and see. It does make sense for us to come all the way down here to 1.4. That seems logical. Retest this low, and then we have the 200 moving average. We also have a weird M setting up here. Some people might even call it a weird head and shoulders pattern. So there's a lot of weakness here, at least in the pattern. But of course, keep in mind on the monthly, we're in an uptrend, but this is where we failed before, and so we certainly can fail here again. Okay, our first euro trader we're going to look at is the euro franc. On a daily, we have an obvious downtrend that we're watching here. and we even have a steeper downtrend from here. And overall, we can see the 20 moving average has been acting as resistance. Likewise, at the same time, we've got our support put in around here. So we've got a descending wedge. We've got the address of entry today for a buy. We're oversold. And we can run up, possibly test the 20 moving average. You can see there is a vacuum here on our volume profile. So if we get above, looks like if we can get above 1.2110, we can run up at least up into 1.2180 to get back up into some of this more consolidated volume. Our point of control is beneath us at 1.2088. But again, our pattern is which way we're going to resolve this. But while we're waiting for it, we can certainly play the support and resistance trades. Also for the euro, we have the euro yen. And here, well, you can see that we're breaking out here. We're breaking out. This was the trade we've been looking at. We finally closed outside of it. And so now the question is, on the daily, when we pull up, we can see where we are with the wicks. So if we get below today's low, I think it's safe to say that we're going to go down and test the 200 moving average. So that's where I will put my alert. But we can see that buyers did find value right here at this 114.50-ish range. So buyers did find value here. But we've broken this support, we've broken the support of the uptrend line, and so I would be thinking that. But when we come to the market profile, we can see on the hourly, if we get above 115, we're in a vacuum, and we can, these two big candles, we can just shoot right back up. So it's got to be careful, and that's why we got to look for to get below 45 to take the short down to at least a 200 moving average as a first target, and then we'll have to readdress it after there. For the pound, we're watching the pound yen. We can see our descending wedge by looking at our resistance, by looking at our support, and we're asking ourselves, which way will this resolve itself? Is it going to break down? Is it going to break higher? We also have a channel that we're looking at as far as this downtrend from April. When we look at our market profile, we can see our resistance and point of control above us. This is where the majority of volume is, and so if we come back up here, it would most likely pause, and you can see that that's basically at the 20 moving average, the 200 moving average. So this is one we're watching. Every time it comes down to support, we should buy. As we get closer to these moving averages, we should consider selling. Look at this past week. Basically, once we get around 132, it wicks up there, and then the sellers come in and take control. Our RSI on our hourly is saying that we could buy right now. So there is an opportunity, and there is a little vacuum right around, if we get above 131.25, there's a little vacuum in here to 131.60-ish that we could possibly slide up into before hitting this volume resistance. Okay, for our low volatility watch list, we're going to trade the pound dollar, and our inside bar watch list, we're going to look at the euro franc. So let's pull up the chart and take a look at these two potential trades. Okay, so we have our inside bar of the euro franc, and certainly it's a big one, but in basic philosophy, what we're going to do is you take the low of the bar, which we have basically at a support level, and we take the high of the bar right in here, and we trade the break. And that basically works with our descending wedge that we're watching anyway. So that's one thing that we're watching. And for our low volatility, we had the pound dollar. So let's bring that on over here. And now that is going to be on the hourly. And what we're basically doing here is taking this and throwing some Bollinger Bands on here. And we can see that we're starting to get that consolidation as price hovers right in here. So as these bands continue to tighten, that's where you're going to mark the high and low of the bands and trade the break. As we come to the economic calendar, we can see for the Swiss we have monetary policy, their quarterly monetary policy announcement. So that certainly can move the Swiss franc, and we're really watching all three: the euro franc, the pound franc, and the dollar franc. Now we saw some movement on the dollar franc and the pound franc over the past couple of days, run towards the 20 moving average. So that certainly could affect that. We got inflation data here in Italy, retail sales for the pound. For the European Union, we have the HICP, which is basically an index of consumer prices. And we have housing starts, but more importantly, in the States, we have jobless claims. How many more people have been laid off that are looking for uh, jobless claim support? So that number can certainly, especially with all the weakness in the state's economy, that certainly can be in the market if it's better than expected. And also, we have Philly Fed. Just like for today, we had the New York Empire State Regional data, and now we have the Philadelphia regional data. As always, we want to thank you for watching our video. Continue to send us your questions, your feedback. Let us know what you like, what you don't like. You can send those comments to analysis@fxcast.com, or you can post to our daily forum. Thanks, guys, and I'll see you next time.